Okay, let's start. Chapter 4. Chapter 4 was about cost volume profit analysis, if you still remember that. So on the cost volume profit analysis, we come up with the contribution format income statement. Income statement, which has cells. After that, we split the cost, the total cost of organization. We split them on how the costs behave. We split them on the variable cost and the fixed cost. Once we deduct from cell the variable cost, we call that calculation, mid-calculation, we call it contribution margin. That's the first calculation on the formula. But at the end of the day, you have to understand sales minus the variable cost and fixed costs. If anything left, that we're going to call it operating income. Make sense? So whatever, if you want to make operating income, if you want to generate operating income from your company, you have to cover all your costs with your sales. You have only one thing to cover the cost. That will be sales. So if the variable cost, let's say, is 50 and the fixed costs are 1,000, if you don't get 1,050 sales, you're never going to get, at least, you're never going to see income. What will be the here in the middle between sales and variable cost, that calculation, how we're going to call it, it doesn't really matter. The fact is, you have only one option to cover your cost. Now, how the costs behave, we're going to split it on the variable and fixed cost. But that doesn't change the fact that you have to cover your costs. As long as you cover your costs, you're going to have operating income. If you cannot cover your costs, obviously you're not going to generate operating income. Now, on the cost behavior, we found out that the variable cost behave in two ways. It behave per unit and in total. So what we said, per unit, the variable cost always going to stay the same. Let's say our cost is $5 and $5 and $5 going to continue. Make sense? Variable cost per unit is never going to change. What's going to drive the cost? Number of the units that we're purchasing. Make it this way so it can be a little bit more easy for you to process it. So the number of units is going to drive our variable cost. If we have 0 units, if we purchase 0 units, now my cost will be 0 times 5. My cost will be 0. Now, if I start plugging the units here, the cost exponentially is going to start growing. Why? Because the cost per unit stays the same, but the number of units that I'm purchasing start driving the cost. So what will be the graph from the cost per unit? We can easily see the graph from the cost per unit. Once you put it in the graph, and we're going to see that our cost per unit always going to stay the same, flat line, all across. What's going to happen with the total cost? Total cost exponential is going to start growing. Why? Because we're changing the number of units. We're getting new units and we're getting more units. As long as we're getting more units, our cost always going to go up. Number of the units is the one that drives the cost. As long as we have 0 units, 0 cost. 1 unit and the cost start growing. Now that's the variable cost, but let's see the other cost which we have in our calculation here, which is the fixed cost. On the fixed cost, I wanted you to be able to see on the same screen, but let's make those one a little bit smaller because we don't need it that big. Those charts here. So the fixed cost is a different story. Why is the different story? Because total fixed cost is always the same. Let's go with $1,000 here, just to be more interesting. So the total fixed cost always going to stay the same. However, the number of the units is going to determine how we utilizing the fixed cost. Here we cannot start with 0, but no, why not? Yeah, we can start with 0. Why not? But if we start with 0, the cost per unit will be 0. It's not going. It should be cost per unit will be 0. It's not going to be 0. It's going to be 1. It should be 1,000. So my point is, if you pay your rent and decide to go on vacation for 1 month, and nobody lives in the apartment, the cost is $1,000, even though nobody lives inside. Make sense? But let's say start with 1 here and 2 so it can make more sense. So if one person live in the apartment, then the cost per person is $1,000. If we decide to increase the number of units, the cost per unit is going to start going down. How it's going to show on the graphs? Well, the total cost always going to stay the same in total. But per unit, that will be a different story. Per unit, as you can see, more units we're using the total cost, less the cost per unit goes down. So per unit, if you want to express it as a chart, it's gonna look like this. So in order to predict the cost, what we're gonna look for? We're gonna look for reality where the cost is predictable. Reality when we can stay on the stable cost. And what's that reality? We're gonna look for the flat line where the cost is flat line. Our variable cost per unit is the one that always stays the same, and our fixed cost in total is the one that always stays the same. So that's why when you see the question, this is the first thing that you have to figure out, and you have to calculate it. Once you get the variable cost per unit, you know that you're on the stable position. Once you figure out the total fixed cost within the relevant range, you're on the solid foundation now. And now you know the only way you to control, the variable cost per unit always is going to stay the same, but in total, always going to increase per number of units. Well, the same number of units drive the sales too. Make sense? Because obviously you want to increase your sales, but if you want to increase your sales, you have to increase the number of the units, because the sales is also driven by number of units. But the sales is going to behave pretty much like a variable cost. Why? Because the sales price per unit is going to stay the same. The only thing that's going to drive the sales will be the number of the units that we're selling. Let's say now here per unit, our sales are $10 and our variable cost is $5. Let's use this one for 1 unit. But fixed cost, regardless of the number of units, always going to be $1,000. So once we know that cost structure, once we know that for 1 unit my sales is $10 and my variable cost is $5, I can see how much I can generate from selling of 1 unit. And that will be my contribution margin. So the contribution margin is how much 1 unit contributes to your company. And that will be $5 here. It's gonna be equal sales minus, let's put the formula so it can be easy. That will be $5 we're gonna generate. Now the other way you can express it, I can express it as a per unit, as a dollar amount, but I also can express it per unit as a percentage or as a ratio, other way to say it. And we also always know that the sales are always and always 100%. So now the question is how much contribute 1 unit to our company? If we sell $1, how much of that dollar is gonna come into the company? Well, we can easily calculate it. 5 divided the contribution margin divided by sales, and that's gonna give you the 50%. So what that means to you, that means that for every unit that you're gonna sell, 50 cents, it's gonna come to you. Because you still have to cover the variable cost. Now we can express the variable cost also as a percentage. We have 2 options here. Either they're gonna divide the variable cost divided by sales, either gonna get sales minus the contribution margin, still gonna give you the variable cost. Because that's simple calculation. Now the question is, since I know that 1 unit, if I sell 1 unit for $10, $10 gonna cover the cost of that unit, $5. It's gonna contribute to me $5. Now the question is, how many units I need to sell to cover my fixed cost? Because I'm already covering the sales 1 unit covers the variable cost for 1 unit. Now the question is how many units I need to sell to be able to cover the variable cost of those units that I'm selling, and they to contribute enough to cover my fixed cost. That's why we come up with the first powerful formula, the number of the units that you need to sell. It's gonna be equal to the fixed cost as a nominator divided by contribution margin per unit. That's why we need that fixed variable cost per unit. Because the sales price is also per unit. And once I know that I'm selling something for $10, but it costs me something that cost me $5, I can sell it for $10. That's gonna bring me $5. So the question is how many units I need to sell to cover my fixed cost. Now we can play and we can apply this in many different ways. One of the way will be how many hours I need to work to cover my rent. That will be one interesting question for you, a more practical question. Let's say if you're making $20 per hour and your rent is $1,000, the question now is how many hours you need to work in order to cover your rent. And that will be very simple calculation. The number of hours that you need to work, it's going to be equal to rent, which is $1,000, divided by, let's say you're making $20 per hour. So you need to work 50 hours. Once you cover 50 hours, you are fixed cost free. Your rent cost free. Let's put it this way. Let's put it your rent cost free. So if your rate is equal to $20 per hour, and your rent is equal to $1,000, you simply need to work 50 hours to cover your rent. And once you work 50 hours, once you generate that income, now we can look for the other expenses. For this company, let's say per unit, now the question is how many units they need to sell in order to cover their fixed cost. Once we know that the contribution margin per unit is $5, the number of the units that they need to sell is going to be equal to the fixed cost divided by contribution margin per unit. And as long as they're selling 200 units, they can cover the cost, the total cost. So as you can see here, we're working with the contribution margin. Why are we working with the contribution margin? Because contribution margin is after the variable cost. With the contribution margin is the one that left from us, for us. After we sell the unit, cover the variable cost, and now we can enjoy those $5. Once we cover the fixed cost, we are cost free. Make sense? So that will be one thing that you need to know is the number of units, obviously. But the other thing that you need to know is the total sales. Let me insert here some columns. The total sales is another interesting thing that you need to know. But for the total sales, we're going to find it when we're getting our fixed cost again, divided by now contribution margin ratio. Why the contribution margin ratio? Because we want to know from the sales how many percentage, what's the percentage of the sales that actually stays with me? Because that percentage should cover my fixed cost. So in this case, the total sales should be equal to, that will be fixed cost divided by contribution margin ratio in this case. So once we generate $2,000 sales, we have enough to cover our variable cost and our fixed cost. And we are at the break even. That's why I told you those two formulas are the most powerful formulas from the cost volume profit analysis. But in order to get to those formulas, what do you need to find out? You need to find three things. You need variable cost per unit. Once you get the variable cost per unit, you can find the contribution margin per unit. The other thing that you need to know is the contribution margin ratio. Once you have those three, the last thing that you need is your nominator on the formula, which is the fixed cost. So in every question, what you need to find out, you need to find the contribution margin per unit, contribution margin as a percentage, and fixed cost. For every time when you see cost volume profit analysis. For the contribution margin, that will be calculation between sales minus the variable cost. Give you a contribution margin as a dollar amount. And the other easy thing is to get that the contribution margin ratio. And then you start applying the formula. Every time when you need additional, let's say I want operating income to be equal to $5,000 because I don't want to work on the break even. The only thing that you have to do is to add that operating income that you want, add it to fixed cost. Once you add it to the fixed cost, apply to in the formula and see how many units you need to sell, how much sales you need to generate to get the operating income that you want. Margin of safety always will be where you are currently compared to the break even. If I'm currently selling 300 units and my break even is at 200 units, where is my margin of safety? Obviously, 100 units. You can express it as a amount of sales. You can express it as a percentage, the difference divided by the current situation. And you can see the contribution at the margin of safety as a percentage. From chapter 4, the last thing that left is the operating leverage. But the operating leverage is related to the company structure. What kind of company are we running? Are we running company that is heavily on the variable cost, or company which is heavily exposed to the fixed cost? On which reality we are? Here the fixed cost, let's leave it $10. Here my fixed cost will be ginormous. Where is my structure here? Where is my also operating leverage? Because here, as you can see, 1 unit contributes 1%. Where here 1 unit contribute 99%. So for every dollar that you're selling, 99 cents, it's gonna come to you. Here, for every dollar that you're selling, only 1% is gonna come to you. So here you're relying on the number of the units that you're selling, where here you're more relying on the sales of 1 additional unit. That's your chapter 4. Now on chapter 5, what we did in chapter 5, we went through the process of the company. So what I need you to understand is, in reality, this classification here, again, this classification for the cost volume profit analysis, we did that cost volume profit analysis because we split the costs only on 2 types, variable and fixed cost. All the costs. There's no mixed costs, there's no other costs. We only split them on the variable and fixed cost. Now, in order to get the cost of the product, we're gonna look at the cost from different angle now. The product cost, as you already know, has three. In order to produce the product, we need three costs. We need direct material, we need direct labor, and we need that manufacturing overhead. Once we get those three costs, I can say I have a product. Those are my product costs. Is that will be the only cost that I'm gonna have? No, it's not gonna be the only. Then what will be the other cost? The other cost will be period cost. What we're gonna do with the period cost? The period cost directly is gonna go to our income statement. Where will be the income statement? The income statement most likely will be somewhere here. Let's make it a little bit smaller. And I'm going to wrap it up those one. So here will be my income statement somewhere. Income statement, as you know, the income statement, now we're going with the traditional format income statement. And the traditional format income statement chasing sales. After that, we need to get the cost of goods sold. And after that, we're going to have some middle calculation. And then we're going to have these operating expenses. And then we're going to have our operating income. Now, the period cost directly is going to be transferred to operating expenses right there. They go directly to the operating expenses. But our cost of goods sold, that's a different story there. Why is a different story? Because for in order to get with the cost of goods sold, I'm going to insert some columns here. In order to get our cost of goods sold, we need to find where's our finished goods. Because once we sell our finished goods, we can enjoy and we can see what will be our cost of goods sold. Cost of goods sold is going to come from the finished goods account. Make sense? Now that's a balance sheet account. We already know that. But that's from where the cost of goods sold is going to come. And we already talked about that those finished goods, before to become a cost of goods sold, they have to become an inventory. How are they going to become an inventory? When we produce the product. Where are we going to produce the product? We're going to produce it in this account, which is called work in process. Once we get that account work in process, we can see how much we produce and how much it costs us to produce it. Also balance sheet account, as you already know, has beginning balance, has the ending balance. All those fancy accounts with the beginning balance and ending balance. Now the question is, once we get those direct material, direct labor manufacturing overhead, then we're going to have our cost of goods manufactured. That cost of goods manufactured, it's going to move to the finished goods and it's going to stay in the finished goods as long as we have the inventory sitting in our warehouse. Once we sell the inventory, what exactly we open the company, so we can sell whatever we produce or whatever we buy, then we're going to have sales. Then we're going to have cost of goods sold. And what we have to make sure, we have to make sure that we generate here enough calculation, because there's another chunk of cost that's waiting for us, which is simply period cost. So your sales, again, you have to cover the cost of the product that you're selling, but also have to cover all the other period costs, which are part of your operating expenses. And that's the only way, once you cover those costs, that's the only way you can generate operating income. Now, the question here is from where we're going to get direct material. That's going to come from another account here. That will be our account raw material. Let's insert some rows here and make it smaller, because I don't need this rows too big. Now, that will be my raw material account, which also going to have the same structure like this account. We're going to have our beginning balance, ending balance, and we did our accounting here just like that. That's how fast we can do accounting now. So from here, we're going to get our direct material. But in order to get the direct material, we have to purchase that direct material. Once we purchase it, we can use it. We can use the direct material. Then we're going to use direct labor when we hire the people. We're going to get it from the payroll account. And our problem is manufacturing overhead. Why the manufacturing overhead was our problem? Because the manufacturing overhead comes at the different period of the company operation cycle. Sometimes comes in the middle of the year, sometimes come at the end of the year. The most accurate number that we're going to have the manufacturing overhead will be at the end of the year. So since we haven't put that problem with this manufacturing overhead, question is how we can calculate that manufacturing overhead ahead of time and not wait for the end of the year to get the actual cost of the manufacturing overhead. And that's how we come up with the idea for the predetermined manufacturing overhead rate. And that rate, we're going to calculate it by estimating. Now, in order to calculate that rate, I have to estimate my total cost for the period that's coming. For the coming period. But that doesn't solve my problem, because I have to be able to allocate to find what will be the cost per single unit, and then to apply that cost. Finding the total cost doesn't help me at all, because I'm not selling total products, I'm selling a single product. So I have to find some allocation base calculate the total usage for the coming period, for the same period, for which I calculated the total cost. Now, what was the tricky part with those two? All of those two, they're based on the estimation. That's the tricky part here. Why? Because we don't know those costs, but we're doing estimation. Now the estimation later on, we're gonna see after the break that you're gonna have. We're gonna call it also budget, because budget is based on the estimation. So we're gonna budget some cost for the period that's coming. We're gonna budget some allocation base usage for the period, total usage for that period that's coming, and we're gonna come up with that predetermined manufacturing overhead. Now, when we actually usage of that allocation base time the predetermined manufacturing overhead rate, it's going to give us the manufacturing overhead that we're going to apply every time when we produce one product. And that's how we solve our problem with the manufacturing overhead. That's how simply we solve our problem with the manufacturing overhead. Now I can get the product cost. Now I can transfer my product cost for the finished goods, and now I can sell it to my client, and I can calculate my cost of goods sold. I'll make sure that sales are high enough to cover my cost of goods sold, and I still have to have in mind that with the whatever I'm generating from sale of one product, I still have to cover my period cost, which is my other operating expenses. Otherwise, I'm not going to have operating income. And that was your chapter 5. So what's essential here for you is to know how to calculate direct material, direct labor, and manufacturing overhead. And the manufacturing overhead, again, you have to understand that we have to come up with this predetermined manufacturing overhead rate in order to apply the manufacturing overhead. How are we going to come up with the total cost for the coming period that we're going to estimate divided by the allocation-based usage for the same total usage for the same period. Both are based on the estimation. But we start applying with the actual usage. So you see here, we're using the estimation for the allocation base, but here we're applying based on the actual usage of the allocation base. That's why the allocation base is crucial for our calculation. We're going to see later on the variances when I start talking about the variances on the fixed manufacturing overhead. Now, chapter 6. What's interesting in chapter 6 before I go to slides? As you can see here, manufacturing overhead, we're going through too many steps here. First, we estimating something. The chances to make a mistake is very high. Then we apply manufacturing overhead, but the way we're applying it, again, we're using estimation. The other thing is we're dealing only with the product costs here. We're not chasing the period cost. Period cost, we're just simply saying that's operating expenses. I'm not looking at those costs at all. I'm not trying to here in this calculation and this process here for the that's called traditional costing. And this traditional costing, I'm not trying to allocate any of the period cost in my manufacturing overhead so I can transfer it to cost of goods sold. I just leave it as operating expenses. Is this the right thing to do though? At this point, we cannot answer that question. We need a little bit more information. So obviously the calculation of this manufacturing overhead and how we're going to allocate the manufacturing overhead will be our key point here. Because again, splitting the cost between product and period costs help us to allocate the costs, obviously. But it doesn't help us with the problem, can we charge more costs to the client? Because if you remember, if you don't make the client to pay for the cost. You have to pay it from your gross margin. That's why we're having here gross margin. The question is, once you do the sales and cover the cost of the goods that you just sold, you get some money. Did you get enough to cover your period cost, which is pure operating expenses? Because if your product doesn't generate enough gross margin, you won't be able to cover your operating expenses. So you're not going to get that operating income. Surprisingly, a ginormous amount of the company, ginormous number of the company cannot figure out this in the first 4 years of operation. And what they're usually saying, the first 4 years of operation is that's why the company dying. The majority of the company dying in the first 4 years. So if you decide to buy a company, make sure the company is at least 5 or 6 years in business. So is there another way, better way to do the manufacturing overhead? Yes, there is. And the answer is activity-based costing. That's what we're going to do today in chapter 7. We're going to deal with, let's go here, chapter 7. And in chapter 7, I'm going to talk about activity-based costing. Now, activity-based costing dealing again, try to proper allocate manufacturing overhead based on how much of those costs which are part of the manufacturing overhead and the period cost are related to our product. Those are our indirect costs. Those are the ones that give us a proper. Direct material, direct labor, those are easy because those are direct. We can directly easily trace them to the product. That's not our problem. Our problem is manufacturing overhead. And the other problem is there anything of the period cost that I can also allocate to the product? The other question that we're going to ask each other is, from those manufacturing overhead, is it fair because it's manufacturing overhead, to allocate all of the costs to the product? Simple example will be traditional, how we allocating the cost onto traditional system. I'll give you simple, very simple example. Imagine 3 students living in 1-bedroom apartment. Their rent is $1,200. Make sense? So if we apply traditional system, we can easily calculate how much every student has to pay as a predetermined manufacturing overhead rate, which is related to the rent, correct? We can easily calculate that. How is it going to be? Our calculation will be super simple. Let me copy this one. We already know that our rent is $1,200. Our students that are living in the apartment are 3. So each student has to pay how much? That's divided by 2. Let's divide it by 3. Each student has to pay $400. Can you guys hear me?
Yeah, I can hear you.
Yes.
Okay. Is this make sense so far?
Yeah.
Yeah.
That will be this very, very simple allocation. Now the only question that we can ask ourselves now is this fair? What do you think? Is this fair? We to allocate the cost divided by the number of the students, every pay $400, job done. Is this fair? You can put different way. You can put it different way. Three students go to dinner. The dinner is $120. They split the bill on, let's plug the formula here, this one divided by this one. Each of them paying $40. Is that fair?
Depends on how much they eat, right?
Now we're getting different things, right? So now, is it easy to calculate this way? Is it easy for us to calculate this way?
Well, yeah, it's easy.
Super easy, right? Super easy. We don't have to sweat on this. Rent is $1,200 divided by three, $400 each pay. You're going to a restaurant, three of you paying $120 divided by three, $40 each. Done. Now, simple. Take like a split second. We get the calculation. That's what we need when we have a huge process, when we have to get our cost of goods sold as fast as we can. That will be the proper way to do it. Again, the question is, how fair is this? Let's go with the rent, $120. Now the three students, let's take a look closely on those students in their life. First is the full-time student. He taking, let's say, he taking 4 courses. His lectures are on Monday morning, Monday afternoon, Tuesday morning, Tuesday afternoon. The rest of the week, he's sitting at home and study like crazy, including Saturday, Sunday. Why? Because he wants to be successful one day in his life. Second student has a girlfriend. And Friday, Saturday, Sunday, he stays in his girlfriend's place. He stays in the apartment only Monday, Tuesday, Wednesday, Thursday. Which days on Wednesday he has lecture in the morning and the afternoon, and Thursday morning in the afternoon. The third student, he taking only 3 courses on Monday only. The rest of the days, he working like crazy. He just coming at the place to sleep 8 hours and then going back to work. Now, is this fair allocation now of the cost? Is it fair 3 of them to pay $400? What do you think? That's where we are. That's what with the question that we have to ask ourselves. So the question is, how we can make it fair? By observing the activity which are behind the process and try to allocate the cost based on the activity which is used by different products or different students in this case. So another simple example will be, let's try to come up with something here on our own, and then we're going to move to the slides. One thing I want you to see is, how many of you paying electricity bill? Probably all of you, correct? Most likely. Every 2 months you're getting in the mail, let's say your electricity bill. Electricity bill is, let's say, $100. That's how much you pay. You're paying $100 per 2 months. $100 is randomly chosen to be easy to understand. Now, once you get your bill, what you can see on the bill? You can see the kilowatts that you're using per month, correct? You can see the kilowatts. That's the only thing that you can see. Can you see on your bill how many kilowatts are related to the lights in the living room? How many kilowatts are related to the TV in the bedroom? How many kilowatts are related to the oven? How many kilowatts are related to the fridge? How many kilowatts are related to the charging the cell phones?
No.
No. So how, when I see the kilowatts that I'm using, can help me to change my bill? Is it possible to do anything about my bill when I see how many kilowatts I'm using, how many kilowatts electricity I'm using? There's nothing I can do about it, right? Because I don't know which activity drives what. So in order we to understand the cost, and in order we to do something about the costs, either increase the cost, either reduce the cost, we have to find what kind of activity we have under that electricity bill. So the first thing that we're going to come up with the activity that drive that electricity bill. Give me example of activity that drive our electricity in our household. Can you think of something?
The TV in the living room.
TV, okay. TV usage, what else? Light, okay. What else?
Computer usage.
Computer.
Internet usage.
What else?
Fridge.
Fridge. Cooking, that means stove, right? Heater. What else? Do you guys have a dishwasher? Washing and dryer. Let's put them together. Washer, dryer. What else? Charging the phone. Okay. Charging the phone. What else? Microwave. Okay. Microwave. Dishwasher. Kettle. Okay, that will be some kind of appliances, or let's put it some general appliances, but let's leave it for later. What else? Is there anything major that we're missing here? Or we capture all the major stuff? I believe we capture all the major stuff, correct? Internet, yes, internet, but internet, there's not much electricity. Let's put it under other, let's go with the other. Air conditioner, yes, air conditioner, I agree. PlayStation, that will be part of the TV. To heat my, yes, I saw that heating your water, and I was thinking where to put that heat water. That will be, let's put it part of the heater. Showering in the bath, that will be, when you're using that, I see now what you're talking about. Okay, if you have the one of those boilers for the hot water tank. Okay, hot water tank. I got it. Okay, and let's put some other. So we come up with the activity, right? We have our activities. we come up with kind of interesting activities, honestly. What's interesting about those activities, right? What is the interesting thing about those activities? When we combine all those activity, it's going to give us 100% usage, correct?
Yeah.
Make sense? If we combine all those activity for the 2 months, it has to give us 100%. Okay, let's go now and let's get this 100%. Let's set up this column to be in the percentage and this one to be equal to sum of all those items here. Our goal is to get here 100%. So let's start assigning based on the normal usage that you have, based on the idea that you have. What do you think? How much we should assign to the TV? Which let's go with the one that drawing the much electricity. Most likely the hot water tank, right? Let's assign to the hot water tank if you got water 30%. The other one will be the fridge, definitely 20%, or let's say go 50% to the fridge. Then we're gonna have the lights. Now it's a winter time, probably 20% would be related to lights. Stove will be another one that's gonna drive, let's say 50%. That's too much though. We are 80 already. Let's say 10%. Now computer, let's say 5% assigned to computer, TV 5%. The heater, now the heater is cold, so let's assign 10%, but this hot water tank, let's reduce it to 20, and the lights, let's put it to 50, push it a little bit down, so we can have more to allocate with the other. Washer and dryer, let's go with the 10%. If we go with the washer and dryer, we should go with the 5% here. Right, stove 5%, heater 10%, washer dryer 5%, charging probably 2%, charging microwave 2%, dishwasher that's gonna take let's say another 4%, and we have air conditioning. Right now, probably we're not gonna use much air conditioning. Let's put 5% here. Now we have 7%. Let's go here. 5 dishwasher 5%. And now that will be 3 and that will be 3, and no, let's go here 2%, and we need 5% somewhere. Let's go back to that stove and increase it to 10. So we have sorry, stove, let's go with 5% and let's leave 5% here. Make sense? So how are we going to come up with those percentages? Basically, you can monitor yourself for 1 or 2 days and see out of everything what's the kind of percentage. It's always going to be subjective, but you as an individual who understands the usage of your household, you can come up with some reasonable percentage. Once we come up with the percentage, now become an easy part. What's the easy part? To allocate the cost. How much we have to allocate? We have to allocate $100, correct? Make sense?
Yeah.
Yes.
But once I know the percentage, now can I come up with the dollar amount? What do you think?
Yeah.
I can come up with the dollar amount, and my total here should be equal to how much? 200%, $200, because I'm allocating $100. Because that bill represents 100%. Now, is it going to be $150 or is it going to be 200? It doesn't matter. In this case, we just simply stick with the $100. But now I can find how much is the cost related to the TV, correct? How I'm going to calculate it? Cost time 5%. So $5 of my bill is related to the TV. Make sense? Do you understand this logic?
Yeah.
So we're gonna look this one, and what I'm gonna do, I'm gonna just drag the formula down. I'm gonna get all the calculation. So now I know what's the cost related to the hot tank out of my bill. So if the next month the bill is $200, I can easily see how much will be the cost. If the bill is $3, $200, and the percentage of usage stays the same. Make sense? But let's stay with the $100. So we come up with the cost for activity. That will be total cost. That will be our allocation. What's the next thing that we have to do? Now I have the total cost. Now I have to find out the usage, right? Once I know the usage, I can allocate the cost per single use. Let's think about it. TV. How are we going to measure the usage of the TV over the 1 month? Based on what? Most likely based on hours that we're using the TV, correct?
Yes.
So let's say you're using the TV 2 hours per day. Make sense? Is that reasonable?
Yeah, okay.
2 hours times 60 days, that's 120 hours, correct? Let's put it here, that will be hours. Light. How are we going to measure the light? Probably the same with hours, correct? Now the day is long. Let's say we're using hours average 9 hours per day. That will be 9 hours per day times 60 days. That's gonna 540 hours. Now computer, we're still gonna stay with hours, correct? How many hours you using the computer at home? Five hours? 6
Yeah,
hours?
that
Let's
sounds
go
like
with
that.
5 hours times 60. That's 300 hours. Five is good, right? Fridge. Fridge working probably 10 hours per day. So 10 times 60 days, 600 hours on the fridge. Now the stove. How are we going to measure the usage of the stove? That most likely based on the how many times we're cooking rather than how many hours we're cooking. So if you have to cook morning for breakfast, lunch, and for dinner, that's 3 times per day. So we have 3 times 60 days, that's 180 times we're using the stove. Heater. Heater, most likely we're going to use it per hour. We're going to use the hour here. So that would be, let's say, 5 hours per day times 60, that's 300 hours. Washer and dryer. Washer and dryer, now we're going to use it. How many times we're using it during the month? How many times you're doing your laundry?
Like two?
Hmm? Two
Like
times
two
a month?
times per month?
2 times
Yeah.
per month? Let's keep it like 2 times per week. That's more reasonable. Let's go with 2 times 4. 2 times. No, that will be 8 weeks, right? 8 weeks. So 16 times. 60 is too much. Okay, so let's go with what will be that? 1.5 per week. Let's go with 1.5. That should be go 12 times per month. Charging the phone. Charging the phone will be you charging your phone probably every day, correct? That will be 60 days, that's 60 times. 60 times you're charging your phone. Microwave, based on how many times using the microwave, probably using it once a day, so that will be 60 times. Dishwasher, how many times you're running your dishwasher per month? Let's keep it the same as a washer and dryer. 30 times once a day, okay, once a day, so let's go with 45. 6, right? 60 days, let's put it 45. Air conditioner, that will be based on hours. Air conditioner, let's say you're running 4 hours times 60 days, that will be 240 hours. The hot water tank, that how many times you charging it, right? Let's go with once a day or 2 times a day. Let's go with once a day. And the last one will be other. Let's go with the other. That will be usage of the what we said here. Internet and anything else. Let's put hours here. Let's say 2 hours per day. That will be 2 times 60, 180 hours. 120 hours. Okay, so now we have the usage. The question is, can I come up with the cost per single unit? What do you think? Can I come up with the cost per unit? Yes. What do I have to do? I have to get the cost divided by the hours in this case, and I'm going to see how much it costs me per hour, correct? That will be the dimension that we're going to chase it, and when I apply the formula, I'm going to get the cost of every single activity. And now, at this point, next month, can I reduce my cost? Once I have this information, next month, can I do something about my electricity bill now? What do you think? Yes. Why? Because now I know how much costs me every single hour watching TV. If every single hour costs me 4 cents, then I can reduce the usage of the TV. If it costs me 3 cents to charge my phone at home, what are you going to do? You're going to charge it in the school. And you can save $2. You're going to reduce the usage of the dishwasher because the dishwasher costs you 11 cents every time when you run it. Make sense? So now, next time, for the next month, what do we need to find out? I need to find the usage. And can you predict the bill next month? Of course. Can you identify activity which are not value-added activity here now for yourself? That's your activity-based costing. Is this make sense?
Somewhat, yeah.
Yesterday, I showed the other guys, the other group, another activity-based costing. Do you want me to show you that activity-based costing, application of that activity-based costing? So watch this. How many of you are working? Your evening class, probably online, probably most of you are working, correct? Okay, most of you working. Okay, fine. The question is, how many hours per day you working? 8 hours. So you're saying you're working 8 hours per day. How many, now listen to the question very carefully. How many of those 8 hours you're working on the 100% capacity? That's a fair answer for 0, 4, 5. Yeah, that's what I would say, around 4, 5. Let's say 5 hours. 5 out of 8 hours. You're working on the full capacity. You are focused, you're actually working. Now, but you're paid for 8 hours, correct? Out of 8 hours that you get paid, you're working 5 hours. Why? Because in those 3 hours, there's activity which are non-value added activity related to anything else, wondering about the future, checking your cell phone, checking your personal emails, doing this, doing that, going to washroom, talking to your coworkers about things that what you're gonna do on the weekend and what you're not gonna do on the weekend and all the other things. Do you think that's fair? What do you think? Do you think that's fair?
Maybe it's not fair, but it's a fact.
It's a fact. Okay. So, which is fair comment, right? Now, let's flip the situation. Okay, let's flip the situation now. You're the owner of the company. Now, you're not the one who working. You're the one who paying. And you're paying now for your employees, you're paying for 8 hours. They're supposed to work 8 hours, and you're paying them $30 per hour. For every hour that they're working, you're paying them $30. How many hours you expect them to work?
8.
Why? That's my only question. Why, when you're an employee, it's okay you not to work 8 hours. But when you're the one who paying somebody to work 8 hours, you want that person to work 8 hours. Why? Now you
Connect
change.
with
Now you're
us,
changing your
right?
measures. Now you're changing your measures. It doesn't matter how effective the employee is, how effective he did the task done. Because listen this, I've been in the companies that people purposely working slowly, and their uh, rationale is it doesn't matter how fast I'm working, they're not going to increase my salary. So if I work slowly, at least I can work less. I still gonna work, right? Don't get me wrong. I'm still working. I'm still utilizing my time, but I'm reducing the the time that takes me to perform single task. Because if I'm fast, then they're gonna find me another work to do. I don't want that to happen. So I'm gonna prolong my normal procedures, normal work, just to keep myself busy for 8 hours and not to take any extra work. So, but my point here was you to see how you're changing your perspective when we change the situation. That was the first thing that I wanted you to see, and how the things suddenly doesn't make sense. Now forget about this. Forget about the 8 hours and 5 hours and who's working, who's paying, and forget about this. Let's do activity-based costing or something else. But I have to tell you, this thing that I'm gonna do right now, you're not gonna like it. Literally. Anyway, let's do one interesting thing. What's the average expectancy life in Canada? You can easily check on the internet and find out. Yesterday, yes, 82. Let's keep it 80 years. Okay? Let's keep it simple. Let's keep it 80 years. 80 years is the time that we gonna live. Me, you, all of us. I hope you're gonna live longer than me. But let's say 80 years. Let's do activity-based costing in our life. First 20 years, the first 20 years, we're only doing the things that the other people telling us to do, correct? So we don't have much control over our life. So the first 20 years we can write it off. So where that give us? That put us in position that we have 60 years to play with, correct? 60 years we have to play. That's where we are. Those are the time, this is the time that we gonna have control over our life and we're gonna do the things that we want to do. The last 5 years, shall we count them? Those last 5 years most likely will be the first 20. We're gonna depend on somebody else, hopefully not, but most of the time we're not gonna be on the normal capacity. We're not gonna do the things that we want to do or the way we want to do it. So let's eliminate the last 5. Where we are now, we are straight on 55. Now 55 years. So now we're talking about, let's go with the day. The day has 24 hours, correct?
Yeah.
Okay, out of 24 hours, how much you sleep?
About 6.
6 right now, but usually the people say you're supposed to sleep 8 hours, correct? Make sense?
Yeah.
8 hours is as a percentage of 24, that's 33%. So during the remaining 55 years, we're gonna sleep 1/3 of this time we're gonna sleep. So 18 years gone. Right there. So now we have 36.6 years. Are we gonna work?
Probably, yeah.
Probably. How many hours we're gonna work?
8 a day.
8 a day. Okay. Where that gives us? That's another 1/3. That means work out of 55. That's another 18.5 years gone. How much left now? 1/3. Correct? Now we are around 18 years left for us. So, are we going to commute to work? So, how much are we going to commute? Commute to work. 1 hour per day, correct? So that's going to give us another out of 24. So out of 55, 2.5 years gone on commute. 2.5 years of our life went to commute. Are we going to use washroom?
Yeah.
How much time? How much time you usually spend in the washroom? Now, imagine this. In the lifetime of 80 years, the calculation is usually if you spend 20 minutes per day, 20 minutes per day in the washroom, that translates between 3 and 5 years of your life. Let's stay on the lower side. Let's put 2 years of our life. Washroom. Now the question is, are you actually spending 20 minutes in the washroom? Probably not, probably more. But let's keep it simple. Let's take another 2 years of our life in the washrooms. Those are years here. We'll make it capital so you can see it. All these are years. So where we are now? We have 14 years. Question for you. If we're spending 20 minutes in the washroom, how much time per day you texting? Or spending on your cell phone? More than 20 minutes or less than 20 minutes?
2 hours per.
So let's say 2 hours, you say?
Yes, I do 2 hours for short video.
Okay, so if you're going with that one, texting, video, social networks and everything, let's go with 2 hours. 2 hours out of 24, that's almost 8 a little bit. So for that activity, we're gonna spend in our lifetime out of the 55, right? We stay with the 55 time. We're gonna spend another 4.5 years. How many years left for us to live? Less than 10 years now. We're down to 10 years, people.
We also need some time to do the housework.
Housework, cooking, everything. That's another hour and a half.
I
Let's-
agree.
Let's put
One.
hour and a half. Let's put 2 hours for cooking, for eating, for cleaning, for everything. Let's go with 2 hours. That's exactly the same number here, right? So for that activity, we're gonna spend another almost 5 years of our life. How much left for us? How much left us for us to live? Less than 5 years. So from the 80 years that we have, we end up with less than 5 years to do something meaningful in our life. Now, of those 5 years that left, how many years you're gonna be happy? Because technically, how many minutes per day you feel happy? Honestly. Shall we continue with this, or that's enough?
People
That's
are
the
posting
This is
stuff in the
like
chat.
This is your activity-based costing in our life. Now the question here is there anything we can do about it? Because imagine this, imagine if at the day that, because that day is gonna come for each of us, at the end day, just few minutes before we just move away, somebody give you a report, print the report of the old activity that we did over the 80 years of life. And when you see this report, you can react two ways. One way will be, what? That's how I wasted my life? Or the other comment will be, wow, that's a very good use of 80 years. Now the question is, where you gonna be? I'll leave it to you. But that's your activity-based costing. In personal life, practical application of activity-based costing. If you want now, I can give you 5 minutes break to process this, and we can cover this. I can cover the slides.